Welcome once again. We are officially recording, and that legal requirement has now been posted in your chat box. Thanks for being here for our second meeting together. This is the fiscal portion of the planning grant curriculum. If you haven't, please go ahead and sign in or keep doing so. I'm seeing some things come in. Thank you for that. And I am going to do a few reminders before I hand it off to our primary presenter today, Thomas Darnell, our Fiscal Grants Officer, who will introduce himself. But before we get to that, because not everyone was probably on our initial orientation last week, I just want to send a big shout out to our programs that are participating in this planning grant cohort. So welcome to the Apprenticeship for Non-Traditional Employment for Women, the Great Peninsula Conservancy, Northwest Straits Marine Conservation Foundation, Student Conservation Association, Volunteers of America Western Washington, and the Washington Association of Child Advocate Programs. How exciting. What an interesting group of cohort, both direct service and environmental service. Really excited to have everyone with us today. One of the pieces that we covered on your planning grant was, Robin, how in the heck am I going to remember and learn and keep up with all of the information that's going to be provided over the next 6 months? So we have some resources, and this is just a reminder that our online subgrantee pages will benefit you. Primarily the one at the top, the planning grant meeting materials page. And I'm going to see if this will work for me and actually take you there. Folks saw this last week, but what's different now is after our orientation, we have posted the agenda, the presentation, which is the slides only, the full recording, and the handout that we talked about. So each and every time we meet, this will be updated, a couple days, takes our web folks, but everything that you hear and everything that we talk about will be at your fingertips. This will become a library of sorts. And something that's easy to overlook is at the very top here, our planning grant curriculum and benchmarks is not just a heading, but it is a link to your entire 6-month period where it will address all of the learning points and the webinars. So with that, Thomas, do you want to maybe start us off by introducing yourself and maybe giving a little bit of your philosophy on how program and fiscal can work together before we start the actual presentation?
Yeah, sure. All right, so my name's Thomas Darnell. I'm the Fiscal Grants Officer for Serve Washington. So I started here in April of last year. Before that, I worked for several years at an AmeriCorps program called Volunteer Maryland. It's based in the governor's office of the state of Maryland. I was the operations coordinator, so I had a lot of the fiscal responsibilities for that program. So other things that I did, one of the things that I kind of realized when it came to doing fiscal for an AmeriCorps program is that you kind of have to be in everybody's business in order to do it right. Like I had to always be talking to other staff members about what they were doing, because otherwise I'd just get like receipts or invoices and I'd have no idea what they meant or why they were supposed to be paid, or so I would go and I'd talk to our outreach manager, and he would tell me about his recruitment efforts, which would include ad campaigns, which explained some of our expenses. And at the same time, I also got involved in a lot of aspects of the side of things because I actually knew what was going on. So um, so I and I think that because of the way the AmeriCorps program, you really, you have a lot of program people who are not going to want to touch fiscal issues with a 10-foot pole. And, oh, am I breaking up? Let me,
Well, it could just be me, Thomas. Robin
I
having those
saw,
issues again.
I saw a nod. Is it better now that I stopped my video?
Yes.
Okay. Well, I will go without video in that case.
Yeah, that's actually good. I should have mentioned up front, in general, videos do kind of steal some bandwidth. So if folks would be willing maybe to, I love seeing folks, but if folks would be willing to turn off, that might help everything. Thank you.
Okay. I was just saying that um program people are often reluctant to get involved in the fiscal side of things, and fiscal people, often their responsibilities just don't overlap into the program areas. And that that can sometimes um, be a be an obstacle to um, running a good AmeriCorps program. So at the very least, there should be some clear conversations between fiscal and program people. It's a really good idea if both sides have a good sense of what the other side is doing, and maybe you put your heads together and come up with strategies for a lot of these fiscal duties. Because if it's just a fiscal person trying to handle this, um, they they don't entirely have the understanding of the AmeriCorps program to make some of these judgment calls. And if you just put it on a program person to handle this fiscal stuff, they might not understand all the fiscal systems and resources that are available to them from your organization, in order to, um, have everything in compliance. So, um, so that's my thoughts on program and fiscal working together. Like I said, I worked for several years at Volunteer Maryland. I started there as a AmeriCorps member doing my second year, and I was serving in the headquarters as a peer leader. My first year, I was a Vista, Strong City, Baltimore. I was based in Johns Hopkins University, um, helping do robotics programs in city schools, competitive robotics, VEX. Um, and let's see, a long time ago, I was a Peace Corps volunteer, served in Mali, uh, 02 to 04, natural resource management sector. I'm originally from Michigan. Um, you can probably guess that I lived in Maryland for a few years, and I moved out here this summer. Um, yeah, Robin, you have anything you want to add?
I think you did a really nice job of giving some clear examples on why we believe there needs to be kind of that um, harmonious relationship between the fiscal and programmatic side. I would say, every agency is different, especially I think the larger the organization, maybe the more removed or the more siloed those departments can be. And at the very least, just setting up regularly scheduled one-on-ones, even if it's just, 10, 15 minutes every couple of weeks to exchange information, as Thomas said, and to ensure that in addition to other, fiscally, related grant and contract regular principles, that folks really get the additional layer that is AmeriCorps, because we do have a lot of statutory um, requirements that can be more robust or feel more challenging at first than traditional grants management and contracts management. And so, yeah, it takes a village. Thanks for sharing, Thomas. And I think with that, we'll get started with today's presentation. Go for it.
All right. So this slide is on the Omni-Circular to CFR 200. CFR is Code of Federal Regulations. So I usually hear this called Uniform Guidance, or UG. So this is, basically going to lay out the main guidelines for your administrative requirements and also your actual spending and tracking with funds from the grant, and any audit requirements for your organization, what your thresholds are. So see, I believe the next slide is, yeah, so this is, there's a link here to the actual Code of Federal Regulations. You can find it online. You can click on it, Robin, and hopefully we don't crash your computer by opening too many applications. So 302, 200 302 was the main accounting requirements, I think. But so what you'll see in that section is, just basically the guidelines are gonna tell you to, make sure that it's very clear how federal money is being spent, how non-federal money being applied to the grant is being spent. And don't, it's okay, Robin. I think everybody can kind of see how the website works and everything. And this, this link is on that slide. So when you get access to the slideshow, you can follow the link. Okay, so this is just kind of an overview of just the layers of regulation and oversight that come to this grant. So you can see that it's originally conceived by these acts of Congress, and then what we just went through was the Code of Federal Regulations, which is how federal agencies have interpreted aspects of those grants, or aspects of those acts in the way that grants are handled at the federal level. Then you come down to AmeriCorps, and you'll see CNCS a lot as a term. It's an obsolete term now. In Washington, they call themselves AmeriCorps, which is an agency, not very closely related, but not to be confused with the programs that are AmeriCorps as well. So it kind of helps us in our mind to keep CNCS alive as a kind of legacy term, but it's not proper terminology. So don't be confused if you see CNCS. That just means AmeriCorps at the federal level. But yeah, so AmeriCorps, the agency, gives us terms and conditions. Come to us, we add a layer of terms and conditions based on the circumstances we have in Washington, whether it's unique state regulations or unique things about the structure of our programs or the way things tend to work in Washington. Yeah, so we have a set of terms and conditions that are in addition to the AmeriCorps terms and conditions. Then you have documentation specific to your grant that comes through, and then you have the things that you've produced, um, your application and your budget and such that are now like something that is built into the grant that needs to be followed. So those are the concentric circles that govern your grant. Um, let's move to the next slide. Yeah, so this is kind of an important point. The segregation of funds. So you can see there you have AmeriCorps and grant in a separate box. You have AmeriCorps grant and the match. So the what's really important is that AmeriCorps grant money is you don't use it to match other funding sources, and any money that you match to the AmeriCorps grant, you don't use that to match other funding sources. So you don't take the same money and match it to the AmeriCorps grant and to another grant. Any money that you do match to the AmeriCorps grant is under pretty much the same restrictions as the actual federal money. And so you really you need to be able to, you know, to a very good degree tell where that money came from and how it was applied to the AmeriCorps program. There needs to be documentation. You can't just throw all your money together in a pool and say, look, we spent enough money to run an AmeriCorps program. Thanks for the grant. Like, you have to demonstrate how that's being spent on the AmeriCorps program. Um, and if you have excess grant money that you can't spend on your program, that doesn't mean you just spend it on whatever. It You probably want to spend it on your program to the best of your ability, and if you can't, you probably need to return that money. Yes, we can go to the next slide. So this again, there's another link to CFR here. But let's go to so this pretty much breaks down what'll be in that section. So I talked about match. So most of the time when you get federal money, one of the strings that comes with it is that you are also spending non-federal money to match that grant. So um, so when it comes to acceptable match, you're going to have to verify that you actually spent that money, or in-kind contributions are also acceptable. You need to be very careful about determining the amount that that an in-kind contribution should represent, and you need to document very well, because this is kind of an area that can cause trouble in audits. So they're held to a little bit higher standard because you're not dealing with actual funds being transferred. You're dealing with in kind, right? Something that seems to have cash value, but it's difficult to verify. So definitely would recommend a little deeper thought and documentation when it comes to in kind. But also with cash, you're going to need to show the paper trail of expenditure. Now, like I said on the other slide, the match that you apply to your AmeriCorps grant, you can't match that to other grants. So necessary and reasonable is this is a very important phrase. On the face of it, it's open to wide interpretation. But you can probably guess that AmeriCorps has been around for like 30 years. There's some clear idea of what necessary and reasonable means. So if you have questions about that, you'll probably want to discuss that with your program officer or with me. But generally speaking, you know, is this something that is going to, and you know, you're planning grants, so you're trying to build the structure to start an AmeriCorps program. So is this something that is meant for your AmeriCorps program? It's not something that is just generally meant to improve your organization and possibly in the process improve your AmeriCorps program, but it's meant for your AmeriCorps program. So, you know, there's different, I think that in general, a lot of these costs are probably going to be personnel costs. But, you know, there's other things like supplies and background checks and travel and different things that are necessary and reasonable in order to start up an AmeriCorps program. So, um, yeah, and then so allowable, um, that's, you know, you can read the letter of the law of allowability, um, but you know, it's basically going to boil down to um, does first of all, does it seem to match up with your budget? Um, and also, you know, necessary and reasonable is also a big part of allowability. There are some specific AmeriCorps prohibitions on what money can be spent on. For example, like lobbying is not allowable. Um, there's, um, I don't know, Robin, are there some good examples of non-allowable activities you want to throw out there?
Sure, I can think of a couple that have our operational programs have asked us as of late. So some folks on the line that may be more in tune with AmeriCorps and national service may have heard that recruitment has declined in recent years, and so folks are trying to be really creative when it comes to recruitment methodology. And unfortunately, some of the things that you may see in the employer world, such as sign-on bonuses or gift cards for applications, those types of things would not meet the necessary and reasonable test. We have strict guidelines around what AmeriCorps members can quote unquote make as far as living allowances and how those living allowance payments are structured. They're not structured based on an hourly wage. They are not structured based on one-time givings. They are determined well in advance and paid out over the course of the service. So that has been something we've been talking about lately. I think another one that tends to pop up year after year is the allowability for recognition and celebrations. And folks often want to have graduation parties and things like that for members, all of which can be done if there's a agenda that can pass that necessary and reasonable test. If you have working lunches that have those agendas and require the folks to stay together, but other types of just random gifts. Alcohol is a very clearly defined unallowable cost in subpart E. You have to be a little cautious when it comes to providing things that may feel like they are more of a quote unquote bonus than necessary for like a working meeting or a working recognition. Those are the two that come to mind right now, Thomas.
Yeah, um, we have definitely been wading through some of those issues. So best to keep that in mind as new AmeriCorps programs that, yeah, definitely when it comes to like food, you want to have like well documented that, and I would say I don't think I've ever seen anybody try to um, use like a working lunch for staff only. Is is that allowable?
I'm sorry, are you asking me?
Yeah, Robin,
Yeah, in general,
in general.
there's no difference between personnel or AmeriCorps members when
Okay.
conducting a meeting. If you want to provide food or refreshments, there needs to be a working agenda that keeps folks together during that period of the day.
Okay. All right. And so an aspect of that, I guess, that is probably where I'm coming from is that are provided for in the approved budget, where if you haven't budgeted that type of thing and you're constantly having these meetings, that maybe is going to be an issue. But let's see, not paid by the federal government under another award except where authorized. So if you're trying to match the AmeriCorps grant with federal funds, you're going to need some proof that the other federal funding allows that. And hopefully, if that's something that you're trying to do, you are already aware of that and know. Um, and then, yeah, we have the other provisions of the Omni Circular, which you've seen how to access the uniform guidance. That's 200 CFR. Um, so so yeah, so your match is really it's gonna be program costs. It's not, it's not other stuff that your organization is doing. It's program costs, and it's program costs that are not covered by your federal grant. You can go to the next slide. Next slide. So documentation. So um, documentation is very important. Um, I think it's pretty important anytime you're dealing with finances, but it's very important when you're dealing with federal funds and especially with AmeriCorps funds. So, um, you know, for me, when I was doing fiscal work for AmeriCorps program, it was basically, you know, get a receipt, get an agenda, get an attendance sheet, get, um, you know, anything that get the emails that you know supported why this was um, purchased or arranged, get the contracts, um, all of this stuff is it can be important, not just I mean, maybe an auditor isn't interested in every piece of documentation that you retain, but it might help you understand how you've gone about your process if you document everything that you do. Um, so you definitely, at the bare minimum, want to have like your receipts, your contracts, your bids, um, your proof of payment. Um, all of that stuff is very important um, in the case of an audit, but also to help you or possibly another person trying to do this work um, when you've moved on, that having as much documentation as possible will help them kind of recreate what's been happening. So I from my point of view, I think that as much documentation as possible is the best way to have a consistent fiscal system. But at the very least, make sure that you have the documentation necessary to justify the funds that you've spent or the funds that you've reported and for an auditor. Does anybody have any questions on documentation?
It's a good pause, Thomas. We can see if folks want to type in chat, or it's a small enough group if you want to open your audio lines. Is this the point where we're transitioning more into drawing down funds, which will be a very exciting thing for you to learn? But if you have general fiscal questions on appropriate documentation and funds, this would be a great time to pause. And of course, we do realize everyone is very much in learning mode. So different organizations have different histories with federal grant requirements, and we will continue to help build this and provide opportunities to organizations as we grow and as our relationship develops. If folks go to operational status, we often will ask the folks in the fiscal office to attend a robust federal grants management training. Also, this planning period, organizations budgeted for attending a regional meeting, which will have a fiscal track and a program track. So there will be a lot more opportunity to learn about OMB principles if this is a new concept to your fiscal office. I don't see any questions, Thomas. Let's move on.
All right. All right, so I think we could start with the terms and conditions. So these are the Serve Washington special terms and conditions as relate to invoicing. So assuming that you understand exactly how to spend and report, well, how to spend the money on the grant and how to spend the matching money for the grant, this is how you report what you spent in order to get reimbursed for it. So basically every month you're going to send in a packet for us. I'll review the packet. One thing will be the invoice voucher that's going to be signed, and that is where you actually are requesting money, and that's the document that we officially will reimburse you based on. But we also have supporting documentation, periodic expense report, which I'll show an example of momentarily, but I'm going to prepare workbooks for each of you in order to it's gonna have your budget, and then it's gonna have a place where you can put in your monthly expenditures, and hopefully that will be informing the total that you invoice us for. There will also be a document called Program Income Report that I will talk about later. That's pretty much going to concern your matching funds. So you're going to have those three components, and you are going to submit that to me and your program officer, and that will be due the 15th of every month. So your programs are already underway, and you're possibly already spending some money. So I will get that workbook to you by February 1st, and you'll be able to do your January finances and submit them by February 15th. So let's see it. I can, if you can shift sharing over to me, Robin, I can bring up examples of the PER and some of these other documents.
You should now have control.
Yep, I see it. Okay. All right, so how is that? Do I need to blow it up a little?
Probably want to blow it up a little. We are seeing the index page of the
Yep.
massively large workbook with all those
Yes.
tabs on
So
it.
this is what your workbook is going to look like. This index page here is just kind of a basic how it works. But this is what a typical PER is going to look like. So over here in column 1, this is going to be filled in with your budget, and I'll do that. So when you get it, you'll have a budget filled in. So each month, you're going to see that. So this is for August of 21. So let's just, for the heck of it, go to January, the proper month that you'll actually be filling out. So what you're going to see over here is your budget's going to be filled in. So you're going to put in your expenses, and this tracks very closely to the budget that you've submitted and your budget narrative. So if you're looking at this like, I don't know what any of this means, refer to your budget and you'll see that you'll have category A, personnel expenses, and you'll see what's listed under there and so forth as you go down. Member costs won't be a factor because you're a planning grant. If you go on to have an operational grant with actual members, then this will come into play. But for this year, not something that we'll worry about. But so reference your budget. Look at whether you know a certain expense is supposed to come up from the federal grant or supposed to come from the match, and report it as it comes in. Let's see. So some other things. So you'll have on maybe not every program does, but most programs have an indirect cost. That should also be in your budget, and I'll be inputting what was in your budget here, but you'll have to calculate each month what exactly that amount should be to add to your totals. So down here, you'll have kind of a summary of this will be like the amount you were awarded, the amount that you proposed as match, the amount that you had spended as of the previous month, the amount that you have available as of this month, your current period, which is this month, and then your grant balance once this month is taken into account. And then this green box just kind of reiterates this is how much your invoice is going to be. So what you'll see over here on these other columns, you'll have your year-to-date expenditures. So once you get a few months in, you can kind of track, are you on track with your budget? And this fourth column will also help with that because this is going to show you how much of your budget you're going to have left and how much, if you're going over, it'll show you as a negative number. And then along the far right of the PER, so there's a box that's 10% budget. So that if you need to make a major shift in your budget for some reason, probably shouldn't be the case with the planning grant, but could be. If it's more than 10% of a difference from your budget, we'll need to make a budget modification. And I'll just show you real quick. There's a form for that. If you go all the way to the right past your monthly PERs, there's a tab for your federal share if you want to change the federal side of your budget, and then if you want to change the matching side of your budget, there's also a form for that. That's more of a recognize that exists. It's probably not going to come up, and if it's going to come up, there'll probably be more conversation, but just note that exists. So these boxes concern your match. So this is going to be based on your budget, and it's going to show the amount of match that you proposed in your budget. This box is going to look at your current month and see if your current month is in line with your proposed budget. This box is going to have your what we call statutory match. So if we really want you to make your proposed, which we call budgetary match, but if that's becoming an issue, at the very least, we need you to meet your statutory match, which I think is actually 24%. Let's see, then these final boxes concern your indirect rate. So for there's different ways that you could do your indirect rate. If you just have an organizational indirect rate, you can apply it. If you can take the fixed AmeriCorps, which is 5% of your federal costs, and that will be on the federal side, and then 10% of your total expenditures, and that will be on your match side. So that can be a little confusing, but it's 5% of your federal expenditures can go toward your federal drawdown, and then 10% of your total can go towards your matching funds. Now, if you have an organizational indirect rate, you can, I guess it depends on what you chose to do with your budget. I think most organizations apply that as match, but you can also draw. But you cannot draw more than 5% of your federal expenditures in your indirect. So that is what this box is for. This box here tells you your year to date is less than 5%. This box here tells you that your budget is in line and that is less than 5%. And this box shows you that for the current month, you're in the correct range, which is 5.26%. And then the last thing I want to draw your attention to in the PER is the comment box. If you think that you're doing something that might catch my attention or might require a little explanation, if you're like reversing a cost from a previous month, or you shifted a lot of the burden from the federal side to match for some reason, something like that, just make a note in the comment, like, we did this is why. It helps me because otherwise, I have to make a decision on whether I need to reach out and ask or whether it's subtle enough that I can let it slide and then have to check on it later. So it's easier if you just add a little comment if something is going to be a little weird. So we also have the so a lot of the documents that you're going to need to report are going to be in this workbook. So like I said, you have all the months of PERs here. You also have a FFR, which the federal financial report. This is going to be due. It's due twice. The first one is actually going to be due in April, and it's going to cover the period from January to March 31st. So it's a pretty straightforward form with not a lot of entries, but it can be a little confusing. But this is something that we're going to ask for come April. And then there's going to be another one at the end of the year when the grant's closed out. See, other federal funds, if you are matching with federal funds, as we said, those federal funds need to be authorized. So you report them here and you hopefully they are authorized. So this is how you report those, and then it's recorded and confirmed that you are authorized. Now this is the invoice voucher. This is the invoice that you send us each month. A lot of the info is going to be filled in, like your grant number, and time period will obviously change from month to month. The important thing is somebody with the authority to approve it needs to sign it when you submit it. Sign, title, date, and then you're going to want to have the amount down here. And again, that amount is going to be informed by your PER.
Hey, Thomas, before you
Yes.
leave that, can we scroll up? I'm just realizing that the signature says in blue ink, probably something that we can change on our end.
Right.
That is not something we require. In fact, we don't even require ink. It is totally acceptable to do like a electronic signature.
Yep. And I think everybody's probably got a system for digital signatures at this point, with all the steps we've had to take during the pandemic. But if that is an issue, an approval email combined with you know, in the name of the individual should suffice as well. Yeah, and then of course, these mod forms that I showed you before. And then at the end of the year, you're going to have this inventory closeout form. You'll learn more about that as the end of year approaches, but that is in this workbook as well. And so we're back on the income report again, right? Program income report.
We are on the income report.
All right. So this is another workbook that you're going to receive. So this is about your match. So the goal of this workbook is we want your match to be itemized in terms of the source of funding. So whereas in the PER, you show how you've expended your match. Here you're showing where it originated. So if you had in kind, say this is where the in kind came from, or if you're using, like unrestricted funds from your organization, say this is the fund that it came from in our organization. And if it came from like another like foundational grant or something, list it here. Now there's kind of two ways to look at program income. One is this is the match that you spent in the course of this month. And then there's also here's income that we received that is restricted to the AmeriCorps program. We haven't spent it yet, but we have it. So if you spent it during the month, list it up here, and it should track and equal your match. Now we have a comment box. I love the comment box. I like to understand what's going on from other people's point of view. So in the comment box, if you have received some kind of restricted fund that's being applied to the AmeriCorps program, but you have not spent it yet, please note that in the comments that we received this fund for the AmeriCorps program. Here's the amount. We will be spending it down as the year goes on. That's, just to let us know, because what we don't want is for you to be in a situation where the end of your program year is coming up and you have like, $20,000 of restricted funds that need to be spent on the AmeriCorps program, and there's just no way to spend them. And then you're going to have to report that to the federal government via your FFR, and you may end up having to return some funds or something like that. So this is just a way to keep everybody aware of the status of your matching funds. So
And Thomas, can you clarify, because I believe on the slide that will be in the presentation and handouts, we want this form every month, even if there is zero to report. Is that correct?
That's correct.
And would you have them just place a zero in line 1, or how would you like that reflected if it's intentionally a zero?
Yeah, just a zero in the amount, and in the like in the first column, just say no match this month. And yeah, that's fine. Any other questions about any of these worksheets that we've walked through? I know this is a lot, and you're probably not really gonna understand what you're looking at until you actually have your own workbook to look at, and then I'll be any questions.
Maybe while folks are chatting or preparing to speak over the audio, I have a question. If you could go back to the periodic expense report, any month will work. I want to revisit just some of the in the weeds details around the budget modification. So I'll put this in chat, and just want to make sure, Thomas, you agree with me that in general, folks can overspend and underspend individual line items if under 10%. And I think we get that question a lot because folks are nervous that they're really really tied to the dollar value that they assign to each category. And you can overspend and underspend under 10% without, exceeding your total award. It's once you move more than 10% that you need permission in that budget modification, as well as if you have assigned no money to a category and want to spend out of that category, we would need to know. So if you did not budget for supplies and all of a sudden you want to purchase supplies, we would need to do a mod and permission for that. Is that fair, Thomas? I feel like we get asked that a lot.
Yeah. Yes, so that's again, we have this 10% budget box on the PER, and that's, you know, that's going to be stable. Like, once your budget's input, it's going to tell you your budget and it's going to tell you 10% of that budget. And so that 10% box here is your guideline as to whether or not you need to submit that budget mod form.
Thank you.
Hmm.
I don't see any hand raised or chat question. Does anyone want to ask something over audio? We'll pause for a few seconds.
All right.
Okay.
I
Thomas,
will.
do you have more as far as sharing, or would you like me to take presentation back and go back to the slideshow?
Yeah, I'm going to stop sharing and you can go back to the slideshow.
All right. And while I'm doing that, you can answer the question, will these forms be submitted to you, Thomas? And I think we have a slide to answer that as well.
Yep, so per our Serve Washington terms and conditions, you submit them to me and your program officer. Um, is that going to be you, Robin?
I am the program officer for
Yep,
all planning grants, correct?
yep. So you'll submit it to both Robin and myself.
And in addition to that, really good question. We're kind of particular on how it comes into us too. So as you see on the slide and as you will see in your terms and conditions, um, the A19, which is one of the pieces of the workbook, you'll need to save that every month. There's only one tab for that. And so every month you'll update that for what the dollar value you are requesting. And you'll want to save that as a PDF and do some type of electronic signature or,
Yep,
sign it and copy it to a PDF, however that works for you in your world. Whereas the periodic expense report and that workbook, we'd love you to just leave that in your Excel format and submit the entire workbook every time. Thomas, do you want to expand on why that's important for you?
yeah, so that really helps us if we're seeing something odd. Um, we can look for formula errors. Um, I like every once in a while we get something where somebody like changed their PER, but they didn't submit this changed PER to us. So, we're looking at a PER that has information like year-to-date information that doesn't make any sense. And when we have that workbook, we can actually go back and see, oh, okay, this is, you know, January is different in this workbook than it was in the last workbook. And that's where the issue is. Um,
Yeah.
you know,
So
so just looking at this question, if you get stuck filling out your first reimbursement, who do you call? Um, I think either of us could help you, but probably you'd want to talk to me first, I think. Um,
yeah, I'm fine with that. You're welcome to always drop us an email to both to see
yeah,
whoever can get to it first, or once you get used to our phone numbers and you're welcome to pick up Thomas for fiscal and me for program, and we'll get you to the right place in house. We find that that's our responsibility, and we will ensure that that customer service is provided timely.
yeah.
So I think you said this, Thomas, but essentially the work, all of these wonderful things are going to be given to folks by February 1st,
Mhm.
and they'll be able to fill them out and hopefully get them back in by mid-February for their January expenses.
Correct.
And I think we prefer just an email with all the attachments, right? So you should attach your A19, you should attach your periodic expense report workbook, and you should attach your program income report, even if reporting zero match. Did we miss anything on this slide, Thomas?
I don't think so. I think that's, that's kind of the meat of how you report to us once you have everything in order.
Yeah, in the first few months, it will take getting used to. And realistically, one of the reasons we have deadlines and prefer this information monthly is really to assist you with your cash flow. We want to get this money drawn down from the federal government through our payment management system, through our state system, and out the door as timely as possible. So if you do, for some reason, need extensions or have folks out of the office, just drop us a note. Ahead of time is always nice if we know ahead of time what to expect. But we understand that the first few months are going to be a little bit rocky. So I think when we post this, you will have some additional slides that we're not going to go over. But Thomas and I just wanted to ensure that you had some other ways of learning. So folks that are visual, you'll be able to see a little bit more on what each of those kind of workbook tabs looked like. So I'm going to forward past this. Is that okay, Thomas, if I kind
Yep.
of move quickly through these? Okay. So it's an example of your PER and some more pieces of that. All of these little things that Thomas talked about that you will learn as you go.
And I think you're going to have access to this, to these slides quite a bit before you actually get your workbook. So, if you want to kind of look at, if you're like mentally replaying this and you want to like a quick reference to what some of those things look like, you can look at these slides. Yeah, and
Yeah, we're doing great on time. So we'll pause and see if there's questions for the good of the order and for the recording. And then Thomas and I will also hang out after the recording if folks just want to say hi, or we'll kind of have more of an informal opportunity as well. So do review that fiscal workbook. Thomas is going to do you a favor by inputting quite a bit of the budget numbers and some things. Check it out, make sure it aligns with your understanding. We're all prone to human error, right? So I want to make sure that that is reviewed and you agree with your workbook. And then again, we'll be looking to assist you and hopefully get the first invoice package around mid-February, to which we try to turn around your payment as quickly as possible. But by contract, I think we have 30 days to get that money out the door, and we tend to beat that 30 days, right, Thomas?
I think so, yeah, generally. All right, so what other backup do you require for expense being reported? All right, so um, we pretty much expect you to have anything an auditor would expect you to have. And if you go operational, we'll actually be doing a fiscal visit um, within a few months of the start of your operational grant. Um, so the big thing we're going to need your general ledger, and this is actually a good point because your general ledger is going to need to be clearly reconcilable to your PER reporting. Um, for example, if well, I'll say we've had a situation where um, we had somebody where the program person was filling out the PER and they used timesheets to basically come up with the personnel expenses, and they had very very well documented, like here's the hours, here's the compensation for the month, 1st through the 31st. Yes, this is not necessarily needed to be submitted to us. This is something that you need to retain. And again, I think you're probably going to find a decent rundown of this if you look at the CFR 200. But to let me continue with what I'm saying, the thing is, the general ledger and for this organization had entries as paychecks, right? So you had a biweekly pay period. It didn't line up with the month. So, you know, you have a pay period that's like the 26th of the previous month through like the 12th of this month. And then, you know, a pay period that's like the 12th through the 26th. And then a pay period that's like the 27th through, you know, into the next month. And so that doesn't line up very neatly with the system of here's the exact number of hours worked in this month. So for that, I would say that your PER and your general accounting systems need to be reconcilable to each other. So your general ledger is an important backup piece, and if it doesn't actually back up the PER, that is an issue. So yeah, so I mean, you can have a lot of documentation and you know you can sort through it and maybe it'll work out in the end, but it's a lot better if much better if on the front end you address weaknesses like that and have a good system in place for reconciling your PER to your general accounting system and your general ledger. Yep.
Well, I am going to thank everyone for being here and understand that some folks may need to hop off. I'm also going to end the recording, stop sharing our presentation here, and then Thomas and I will be available for any questions, fiscal program, planning grant in general. We will just kind of hang out here for a little bit of time to see if folks want to have additional conversation. So thank you once again. And next week for the program side of the house, we're already back in action. We'll be learning deeply about theory of change and logic models. So stay tuned for that.
Yep. And I'll add